Hello friends, this is Sharangdhar Pande. I am from Chhatrapati Sambhaji Nagar. I also work in Pune. But today's this subject is not about the law. It is about the stock market, and the subject is stock market is falling down. Share market is falling down. So there are so many reasons. We only come to know, we only are informed by newspapers and news media when stock market falls down. And then there is a havoc, and then there is a some figures are given. The people have lost, investors have lost 45,000 crore, 50,000 crore, 60,000 crore, 1 lakh crore, like that. Is it really a loss, or is it, when you market goes up, is it really a profit? So first of all, these are not the actual loss or actual profit. It is a notional loss and notional profit, unless if I have a share of certain company worth rupees 500, and it has, when share market falls down, it comes down to 300 or 200 rupees. And if suppose I sell my 500 rupees share for 200 rupees, then I book loss. Actually, I book loss. I am 300 rupees per share loss I actually suffer. Or when my 500 share goes up to 700 and I sell it at 700, then I actually book my profit of 200 rupees per share. But if I don't sell, the stock is there in my demat account. So even if it is 300 or 200, I have not sold it. Okay, it is devalued, so it is my notional loss. Or when it is profit, it is my notional profit. So should I invest? Now market is falling down, should I invest? Of course, all the giants, all the real investors, all the movers and shakers, all the corporates, institutionals, they find this falling market as an opportunity. So, and they invest huge amount in that. And when you get some share, when share market falls, the prices are so down that when you buy it at that point, and when market recovers, so you automatically goes into profit. The second thing is, who is profitable? When this amount is going loss, people are still in profit. How? Because in stock market, there is a concept of short sell. Means if you are selling the shares in advance and you have projected in future an option, it is available, not in the delivery option, but in future an option, you predict that market will going down and I want to sell 1,000 shares of certain company because I am anticipating that share may go down drastically, and then the market falls down, and when it goes to rock bottom or some point of time, some formulas or some calculations are there, so according to that they come to know that okay, this won't go more down than this and may recover again, so that time they purchase. So share market is the only market where a falling market also can give you opportunity to earn. Or sometimes you predict that this share will go up, So I predict that okay, this share is certain company share is at 100 rupees, and I'm expecting this because of government policies or international policies or trade agreements or treaties between the two countries, or Japanese stock market, Chinese stock market, US stock market, Europe stock market. These are, when you see the trends or some war is going on, or suddenly some political thing comes up and there is a huge setback, like some government suddenly there is a revolution, there is a oppose, and there are chances of the government may fall. So that time stock market falls because a sense of insecurity is developed amongst the investors. And according to me, it is my opinion, of course there are so many experts available in every lane of every city who call themselves to be the experts in stock market. They have various algorithm softwares, some have buy sell softwares, some have so many prediction softwares available. But still the average, moving average, and then 52 weeks average, then so many things. But still I feel that according to my opinion, the stock market maybe at some percentage may be working on these kind of algorithms and formulas, but the major setbacks of market falling down or crashing of stock market happens due to feelings. It is the feelings, it is the international level happening of some incidents, the wars, the change in government and change in the government policies. Like recently the market has drastically falling down because when Donald Trump became the president of US, he has changed the policies. He has stopped aids to many NGOs and many countries, just because he sees that giving aid or funding these NGOs or these countries will not be fruitful. Like we are hearing, we have seen yesterday's news that there is a heated argument between the Ukraine President Zelensky and Donald Trump. And Donald Trump, he was trying to demand monetary support for Ukraine against fighting against Russia. But when Donald Trump told him that, and actually practically also we can see that Ukraine is in nowhere position to defeat Russia, and the money or aid or loans given to Ukraine will not be a fruitful investment in that country. A fruitful investment in some country is that country which is developing, where there is a peace, where there is a harmony, where there is a safe atmosphere for corporate industries, where the nation is going up, having a stable government, have a protection of laws to the FDI. In that way, that country is supposed to be the safe, and automatically all countries invest there. But a country which is on the verge of destruction, where the citizens, where one person, a president, for his individual ego, he has saddled a war on that good country. Ukraine was one of the most developed country of Europe, once upon a time before the war, and they were developing like anything. The world's largest investment, stocks and industries and so many things were going to Ukraine, and worldwide countries were investing in Ukraine. And there was a stable government. But people like George Soros, he doesn't, a group of Soros people who don't believe in peace, because they are manufacturer of ammunitions, they are manufacturers of medicines, they are also manufacturers of bacteria, biological thing. The way the world has faced coronavirus attack all over worldwide, that coronavirus was developed in a lab and whole world was distracted and many economies have crashed and millions of people died. Same way, the people like these Soros, they have toppled down the stable government of Ukraine, and they have projected Zelensky, who was a stand-up comedian, as their pawn or as their targeted president, and somehow they got him elected, and then war started, and the war has devastated the country, and it took Ukraine back at least 25 years back, and because of that oil prices have crashed, soared, and many other things happened due to corona that was developed, happened due to Chinese intervention. So that time hundreds of companies, they've shifted their manufacturing units from China to India or other countries. So these are the happenings of events, different events that definitely affect on share market. Right now also, because of Trump's policies that he is evacuating illegal immigrants, even he has sent Indian immigrants who have illegally entered US. Then he has sealed the borders of Mexico. Then he has stopped aid to the Ukraine and other NGOs that were supporting instability in other countries. Then he increased taxes on Chinese products, and this all indirectly affected on people's feelings, and suddenly the market has started falling down, and this is the reason. So should I book a profit or loss? Should I invest or not? I suppose my advice to people would be, if you want to invest, there is no right time. You can take entry at any point. But if it is a low period, like market is crashed, this is the right time to enter. But if you are looking for long-term investment, then only enter. If you are looking for short-term profit or loss, please don't enter. Then whether I book or profit or loss. So look, how to book profit book is a different concept. It is you who has to decide how much profit you want to earn. If you have purchased a share, it is already 20% up, and you are waiting for further increase, and it doesn't go up and it falls down. So I suppose if your stock is going up by 15 to 20% within a 6 months or a year, then don't wait for it. Any profit above 20%, if you are getting within a year, sell it off no problem with that. If you are having some stocks which have given you more than 50% profit, okay, you are still hoping it will go up, still you can sell half the shares and book profit. If it goes up again, you can sell it at a higher price. Whether I should book a loss. So again, it is your personal thing, because booking a loss means you actually accept the loss. But moreover, the booking a loss concept is more preferred in day trading, because in day trading you buy it at a particular level for day trading only, and you already put a stop loss over there, that if I am buying a share at 110 rupees and if it goes below 100, the stop loss will trigger and you sell it. You control your losses over there, because it may possible that it may fall down from 100 to 60 or 70. So you will face more losses. So better to control your loss and have a stop loss price over there and exit yourself from the loss on a minimal losses. On for profit also, you can target price you can fix. If you are buying 110, you are putting it for 120, and if it hits 120, you should, if you know you have target of 10 rupees only, you should definitely exit over there on that 10 rupees profit. Even if the market goes up, you book your profit and safeguard your amount, because there is no fixed prediction about whether market will go, because stock market is a very volatile thing. And about investors, if you know stock market and if you know the trading, if you know the risks involved in stock market, profits and losses, then only enter into such market. Second thing, those investors who are not trading themselves, who are not investing a single penny through their own trading account or demat account, but they are reliable on some other agencies, other people, traders, who take your money and then you give you a fixed return every month. So that is a risky game. You are gambling your money on somebody else's knowledge, and there are likely chances that you may get a profit for some months or a year or so, and then one day when market will crash the way it is right now, and his all investment will go in the minus, and then you will stop getting your returns, and then you will be uneasy, and then you timidly take other actions like legal actions and filing cases and so on, and then ultimately you lose all your money in that. So, and stock market return, how much stock market gives returns every month? So friends, definitely not 30%, 40%, 50%, but it is possible 30%, 40%, because if you are investing every day and your target is covered and you are exiting, you are safeguarding your investment and profits, then cumulatively at the end of month you may be earning good. But there is no such parameter, there is no such algorithm, there is no such software, there is no such formula that will tell you that I will get 30% profit every month with guarantee. Sorry if you are in that belief. Many of the traders or many of the people who teach about stock market, they may not agree with my opinion. I don't have any problem. It is your way. This is my opinion. I want to alert my people, because most of the millions of people are facing frauds and defrauded, and their money has been vanished just because of some carelessness and believing on the wrong people. Rather, those who are teaching stock market how to trade, they are more in profits, because this is the better way to earn money teaching a stock market than actual trading in a stock market. And I have seen this, many of such people, even the teachers and even the traders, very closely, and ultimately I found that none of both of them are not happy very much. Yes, definitely, if you calculate in terms of success on the monetary terms, then tutors are more profitable than traders. So this is how the stock market goes. Why I feel to speak on this subject today, because I really I have been observing the stock market since last 1 or 2 years very closely. I have invested some money also in there, but I am a long term investor, so I am not in hurry to sell my shares, whether in profit or loss. I am using the stock market investment as a savings, as a pulling up. A drop by drop I am investing. Maybe after 1 or year or 2 year or 3 year, when I will need money, that time I won't think whether I am in profit or loss. I will just sell my stocks off and I'll use that money for my purpose, because I cannot save 10 lakh rupees in a month. So for last 2.5 years I am investing small amount, 500,000 like that every month, every day, every week, and now it is on a substantial level that I can withdraw my money and I can invest it in some better asset. So my object of investment in stock market is different. So I am not a trader, but I have closely observed, I have seen the people totally crashed out in that, losing everything, and they are indebted of in millions. They have taken money from others and that money also lost, and their entire family is devastated because of this falling market. So friends, be safe. At least you should play very safe when you are playing in stock market. Don't invest 100% amount in stock market. Half capital you should go for conventional investment, and half you can take a risk, because this is the highest risk market. So this is my evaluation or analysis about the stock market, and right now the way the stock market is falling down every day, and millions of amount investors are losing in that. But ultimately when someone is selling the share, look, my concept of thing is different. If you are selling in a loss or you are selling in a profit, there is some buyer who is buying it. Even if you think market is falling down and you want to sell in loss, you put your stocks on sale in market and there is someone who is buying it, and that buyer is real wise buyer. Normally they are the institutional buyers, they are the mutual fund managers, they are the big corporates. They actually take benefit. Their own shares are increased at high level, topmost level, and when market falls down and they see that there is an opportunity to buy back the shares. So at this time, this kind of falling market, they buy back these shares, and that is their profit. Same in mutual funds. In this falling market, mutual fund people are also not benefited, because mutual fund people are playing very differently. Mutual fund rate are increased only when the stock market goes up, and that time the percentage of growth you see is very meager. But when the stock market falls down, the NAV falls down very fast. And even if that stock market, mutual fund manager or mutual fund company is sitting in the stock market as a short seller and they are earning millions in short sale, but still just because of market has fallen down, they decrease your NAV amount and they don't let you enjoy the profit of your investment. They only share you some profit when the market goes up, not when the falls down. Whereas the mutual fund management companies, they are earning in a both ways. Rather, they are earning more in the falling market than a upgoing market. So again, mutual fund is, again I said that if you want to, you are a small investor, you want to go slow by slow and make a big pool for a future planning, definitely you should go for a mutual funds too. But in general, this is what my analysis about the stock market is, and I am putting forth my view and opinion in front of you. I hope you will like it. Soon I will come with some new video about a different topic. I speak on various topics. So please subscribe my channel and like the video and press the bell button so to see my upcoming videos and notification about the same. Thank you.